So, I hope you enjoyed the lunch break. I definitely did. Delicious. Thank you very much to our catering service. And now we're just about ready to talk about what makes the world go around. Money, money, money. Finance, better yet. And yeah, why don't we start it off? The blueprint of the financial market. Here we go. So I think the procedure is familiar by now. I will call up our panelists, and then we will start it off. So the financial markets are already using space data and space capabilities for various uses. With the increasing interest in green finance, however, the constantly increasing amount of data at our disposal, and the emergence of new AI capabilities, how will space impact on the future of financial marketplaces? That is the question. And this panel discussion will be based on use cases from which potential improvements, challenges, and also further applications which will be discussed. And as usual, we'll start off by introducing the moderator of the panel. So please welcome with a big round of applause, ladies and gentlemen, here is JOAO, FALCÃO, SERRA. Welcome, JOAO. Now, JOAO is a research fellow at the European Space Policy Institute, and prior to joining the institute, he worked as a diplomat at the Portuguese Foreign Ministry and as a research assistant for Professor Dr. Walter Dawn from the Royal Military College of Canada. Now, he quote, "As explorers of terra incognita since time immemorial, humanity now embraces the new space era, a bold continuation of our collective history. How many of you have looked to the stars and seen the future of exploration and innovation? To think we would stop our journey now would be the same as denying our essence." Great to have you with us, JOAO. Please take your seat. Careful, there we go. All right. And also joining us here on our stage is Will PORTEOUS. Welcome, Will. Yeah. He's the general partner and chief operating officer at RRE Ventures, who boasts a 23-year career in investing, contributing to over 20 company boards. Yeah, and that's the microphone again. A notable leader in geospatial transformation, he served as chairman of Black Sky and lead director of Spire. He directs Nanit, Paperless Post, Pattern, Pilot Fiber, Ursa, and Wave, and was a former director of BuzzFeed. Additionally, he founded and chairs the Dockery Farms Foundation and was an adjunct professor at Columbia Business School from 2003 to 2018. He holds an MBA from Harvard University, from the London School of Economics, and a BA from Honors from Stanford University. Please welcome. Great to have you with us. Will. And we're also joined here by two specialists remotely. On the one side, we have Dr. JOCHEN PAPENBROCK. Can we get him in the picture? Yes, there we go. Hello. He is a financial data scientist with degrees from the Karlsruhe Institute of Technology, currently leading financial technology EMEA at NVIDIA, a global leader in AI and metaverse computing. And with over 20 years of experience, he has played various roles in IA and also machine learning, data science, risk management, and IT across financial services. And at NVIDIA, his responsibilities include managing developer communities, fostering partnership relationships, and handling business development for FSI EMEA. Great to have you with us, Dr. JOCHEN PAPENBROCK. And also with us remotely is Peter Schwentner. Peter is the professor at Zurich University of Applied Sciences, specializes in financial markets, asset management, and machine learning. And with 15 years in the financial industry, he holds a physics doctorate, CFA charter, and FRM certification. Currently engaged with the European Stability Mechanism, Peter leads the Bridge Discovery Project on spatial sustainable finance. He serves as an associate editor and leads a working group on transparency and investment product performance within the European Cost Action, FinTech and AI in finance. So, gentlemen, great to have you all on board. I'm going to hand it over to JOAO, and I'll be back then for the Q&A.
for new companies that we're interested in. So there's a sort of self-reinforcing element to it, to be sure.
These space-based data can also be used to make better decisions, not just on a purely financial way, but also considering an increasing worry with climate and in green finance. Peter, what do you have to say about this intersection between space data and ESG? We cannot hear you.
Data has been more seen as a tool to satisfy a regulatory burden. And if that is the case, then we're talking more about a very horizontal product, right? So something that is very consistent and applicable to basically all industry sectors, to all issued financial instruments, all stocks and bonds. And the willingness of financial service providers to pay for such a tool that alleviates a regulatory burden is limited to what they already know from very generic tools like Bloomberg. Yeah? So we are talking about a price for a Bloomberg terminal of maybe about $25,000 a year. Yeah? So this obviously can only work if there's a service built that is extremely scalable and very generic. It has really a lot of users.
JOCHEN?
On the other hand side, if it's possible to position Earth observation data and derived indicators as a tool that enables new business, then the willingness to pay will be proportional to the revenues that are enabled by this new business. And to give you a kind of ballpark number, if we put, say, if we talk about a management fee of a new product of maybe 40 basis points, so basis points a percent divided by 100, then the price for such an enabling data might be 1 basis point. Yeah? So if you're managing a fund with 100 million assets under management, we are talking about a fee contribution for technology of about $10,000 a year, yeah, which is still small. Yeah? So I think if we can show that this new data layer can really enable new substantial business, then it can grow, because then it also generates a business case for constructing the technology, right? But I think we need to come out of this, say, ESG data niche for just satisfying regulatory burden. Yeah? Yeah, because that's something that's put in a corner of, say, just compliance officers, yeah, and mid-office or back-office activities. And we need to come nearer to a product development and client business. But if we manage that, then I think the upside is quite substantial, because it's really about opening up a completely new window.
Very good. JOCHEN, anything to add on that?
Yeah, I mean, it was quite elaborate what Peter told in terms of the use case behind it and the cost implied. I think one aspect that needs to be taken into account also is the cost of processing the data. Obviously, that's something that we at NVIDIA take care of in using accelerated computing, which makes things faster, cheaper, and less energy consuming. So in the end, we need to look at which data is needed, which resolution, and also the cost of processing this data to for example, translate certain data into other formats, or to apply computer vision algorithms, or to stream data in a temporal way. So that's a very important issue I think we need to take into account into Peter's calculation.
One of the main sources of revenue of these 1 billion by 2031 is commodity flows. Will, can you give us some insights on that? How space-based data can provide, or some use cases?
Sure. This is happening today. So we at RRE are investors in a number of Earth observation companies. And among those, we have a company called URSA, which, among other things, tracks commodity flows. So they've built a model of the global oil supply chain, from production to storage to consumption around the world. And using radar imagery sourced from the world's global star constellations, they can track inventories and movement of the oil through the oil supply chain around the world. Their work actually uncovered a lot of previously unmarked oil storage in China, adding to the overall view on global storage capacity in the supply chain. And we see through that lens movements that indicate consumption. But what's notable is that none of that data is really yet moving financial markets. So what we see on the customer side is that oil traders around the world want to buy that data. But they're not trading on that data yet. They still trade on the traditional benchmark reports that have guided their activity over the years. But there is this emerging, well, let's call it ground truth, in commodity flows enabled by Earth observation data. And the URSA oil supply chain report is just one example. Anything where you've got commodity stockpiles, we increasingly have a global level of ground truth available to anyone who can pay for a subscription, along the lines of what Peter was describing earlier.
When do you think that the financial sector will actually start using this data to make as a basis for their decisions, the primary source?
You know, it's a fascinating question because it's really about competing methodologies, right? We have historic market benchmark reports that are generated through a methodology that's been in place for decades, that consults with parties that have responsibility, custodial responsibility, and that data flows up at a normal cadence. And yet, there's an emerging ground truth which can be updated hourly, and probably will ultimately represent a more precise indicator. And so at a certain point, there needs to be advantage associated with that precision. Yeah. That is where I think we'll see a tipping point.
Very good. JOCHEN, another use case for this space-based data is in the insurance sector, and there are new ways to apply it. Could you give us some insights on that, if you can?
Absolutely. Yeah, so we work with a number of insurance companies and cat risk model providers that leverage geospatial data at certain scale, at certain temporal properties. And they want to better understand the impact of hailstorm or of thunderstorms, and really estimate the claims, the amount of claims, to be faster at claims processing. But the insurance industry is also looking for new digital products, services, smart services, digital platforms they are building out to be able to predict what's going to happen, and also to advise their clients and customers how to deal with upcoming natural catastrophes and climate change and all these things. So processing huge amount of geospatial data is one component here, but also another important component is visualization, almost like 3D visualization using omniverse platforms. And on top of this, some insurance companies are already experimenting or building out models that would help them simulate what's going on in the future using physics machine learning. So it's a number of techniques and data that are combined, like computer vision, geospatial data processing, 3D visualization, physics, machine learning, maybe even a large language model on top of that to interact with such platforms, right? So all these components are out there, and what we are specifically doing here is we help those insurance companies and reinsurance companies to make use of accelerated computing. Accelerated computing is something that has enabled ChatGPT, OpenAI's platform, and it's something that enables also physics machine learning at scale. It enables processing geospatial data at scale at much lower cost and energy consumption. And just as a side information, Meluxina, right, the supercomputer in Luxembourg, ran by Lux Provide. It is also such a supercomputer that is able to process a huge amount of data and computer models and AI models at very high efficiency using GPUs from NVIDIA.
Very good. Yeah, for sure. As we come to use more space-based data, then we start to run into some problems, for instance, about processing this data. And what you've talked about now is that AI, for instance, can help with that, but also other ways of processing data. How do you think that? Can you give some specific use cases also outside of the insurance sector on how these new processes can be used to enable us to actually use space data, as Will was also saying, as a more primary source than just another layer to the model, you know, as the baseline layer? JOCHEN.
So, I mean, the use cases, I think there are some in investment management and trading, some hedge funds are really going into this data and combining that with computer vision models. And I think specifically ESG is an important use case. The risk management in banks includes also the ESG management. And here you would probably not only look at emissions of your customers, or of their customers, but also at biodiversity loss and a number of other things. So you would probably combine a lot of data sources, financial data, geospatial data, and extracting ESG scores from this data. Some companies, I mean, in the investment industry and in the risk management industry, people already rely on natural language processing and recently also large models to extract information from ESG disclosure reports. So that's already a well-known use case that's around for more than 7 years. Now people recently switched to models that are doing the same using natural language processing, but now extend those models by geospatial data to be able to really track economic activity of companies, to better understand supply chains, to measure the footprint of economic activity in terms of biodiversity loss, collecting all these data sources and applying different AI and ML models at the same time and combining those. So that's what we are currently observing in the industry.
Mm-hmm. Peter, I would say that for ESG and to work overall, but also for us to know and companies to know what to actually track and how to process their data, we actually need to have a common understanding of what we want to avoid. I mean, in terms of consequences of these companies to the environment and to society. And so, what can we do about it? How can we establish a common framework for ESG, and how can space help with that also?
I think space data can help to build indicators that are really evidence-based and that use a kind of bottom-up approach. In this context, bottom-up sounds strange because actually it's about space data, but from a conceptual perspective, it's actual a bottom-up approach compared to what is currently done, and which is basically just computing a breakdown of global impacts across industry sectors and across geographies. And this, say, just assignment, this breakdown of the global exposure, for example, makes it possible to assess somehow the overall risk in a portfolio, but it does not make it possible to differentiate between two companies, right? Because if two companies are active in the same industry, in the same country, then such an approach would basically give them the same impacts. Yeah, and that's clearly not sufficient to make a decision. It should be by company A or company B. And so for these relative decision-making processes, we absolutely need more than just self-reported textual data. Yeah, so we need something that's evidence-based and that is measured bottom-up and that is not purely a breakdown. So it should be consistent at least within one industry subsector to enable these, say, relative decision-making, right? And this, say, consistency, this local consistency within a sector or subsector is specifically what would make the data valuable. Yeah? And this is in contrast to the usual approach of creating, say, a very broad, a very horizontal ESG data product. Yeah? So I think this understanding of industry sector processes is really essential to come up with good solutions here. And if this sectorial understanding is there, then I think geospatial data can absolutely open a new dimension. I think we can probably compare to what happened in the car industry with more and more sensors entering cars, right? So we started all with these ultrasonic sensors, yeah, that already are great help in parking, yeah. But now we have LiDARs, we have a lot of cameras in modern cars, we have radars behind the bumpers. So we have a lot of sensors that complement each other and that not only give a different information, but that combined with AI technology allow a comprehensive model about the environment. So if you can combine LiDAR data with camera data, so if you can combine what your cameras see, if you can synchronize it, and if you can make it consistent with the point clouds, form 3D objects, then you can get to a kind of a bird's view. Yeah, and this bird's view then makes it possible to actually get to autonomous car steering, right? And in sustainable finance, we need something similar. We need absolutely this experience of how to create models that can evaluate data from very different sources and that can model different observables at the same time in a consistent way. Yeah, at Tesla, this concept of Hydra nets played a very big role, that basically a neural network with several heads in parallel that, for example, can then calculate distances, but also lanes on the street, yeah, and also obstacles. And this is what we need. So we need this kind of holistic view and at the same time a very good understanding of specific industry sectors. And then I can see that this, the additional data source together with the AI competence and the necessary software stacks can lead to quite phenomenal results.
Very interesting. You were speaking about how these different types of different sources of data will come together, like you know, in a car you have different sensors, and I see that as making data itself a commodity. So coming back to the commodity flows, Will, what do you think, which kind of companies will start to appear and which kind of relationships, market relationships will start to appear? Will we have space companies that will also, not only buy data from other companies to then fuse them together, but also even try to do some kind of verticalization of data also, or what kind of data marketplace will we have?
I think that's a very astute question. And if you look at the history of the Earth observation sector, much of what has been done to date, particularly by legacy companies, is very siloed by data type. And if you go and you talk particularly to customers in the defense and intelligence world, they will tell you that the people who operate the radar satellites don't talk to the people who operate the optical satellites. And so we're just entering a period where there's going to be really meaningful data fusion. And I think the financial markets are going to be among the first customers to really pull that forward, because we're talking about a customer set that, while it may have access to a lot of technical capabilities, really would value ease of use in data integration. So when we look today at companies that are doing, say, asset tracking in the maritime area, or remote project monitoring, when you're talking about an infrastructure project company, today they're doing a lot with optical and with things like computer vision laid on top of it, but they're starting to incorporate other data sets. Earth observation data sets like soil moisture, for instance, to sense fire risk, hyperspectral imagery, to take a look at the plant and the environment around a plant for pollution and contamination. So you're starting to see these overlays of data sets. And to me, there's a great unlock. One of the next great companies in this sector is going to be built around data fusion and ease of use on the downstream end of all this.
JOCHEN, there are also new tools like GUIs being developed to make this data more accessible. It's not just about accessible in terms of on the back end, fusing it together to make it more accurate and to make it more useful, but also we have to make people, actually use it, the end user, not just companies, but not just big companies, but also smaller companies. And in the financial sector, do you think there will be ever a time where user of apps, financial apps, will be actually using satellite-based data?
Yeah, that's a great question, and I think that's already happening, right? The future is already here. So just from our perspective, how we see the market, we work with dozens, maybe even hundreds of companies, startups, and also large corporations that are specialized on making these geospatial data more accessible, more digestible, more usable, consumable, including building easy-to-access platforms and also easy-to-use applications, leveraging technologies like NLP, natural language processing, large models, maybe like a GPT model, to interact with the systems so that the user doesn't even know, is this just pure data, or is it already AI involved? Is it a mixture of AI and data? Is it maybe also simulation? So the back end is not really visible, and there's a lot of interaction with different models and data. And the front end is very interactive, so users could really type or speak what they want to access here. And that's one way to interact. The other way is also adding visualization, as I mentioned before. So people start using Omniverse, which is like a 3D collaboration and visualization tool where you could combine different data sources, also different predictive AI model results, and then you would be able to visualize specific property or supply chain and ad hoc run simulations, analysis, whatever you want to see here. So this is actually happening already. People are building this, the market leaders, but also very creative startups that we are working with. And this all can operate and is built on our accelerated computing platform, which is currently the leading one. NVIDIA has built a lot of software on top of this, very open source oriented. People use, for example, Rapids, which is a very Pythonic GPU accelerated library. There's something called Crew Spatial, which is, as the name says, specialized on processing spatial data in a very fast and cost-efficient way. And there are people and individuals, experts like, for example, John Murray. He's a professor in Liverpool, I think, and he leverages Rapids to build an end-to-end streaming geospatial data application, which is GPU accelerated. So that means he is able to process huge amount of data at lower cost, higher resolution. I think we are not, we can't continue using general purpose, non-accelerated computing. So we need cloud infrastructures, accelerated computing infrastructures like Meluxina that are able to process this data and also run all these applications that I just mentioned, and that are able to combine the data. We talked about data fusion, and Peter outlined this collection of sensors and models in a car. So this needs to be orchestrated. This needs to be run on accelerated computing cloud infrastructures. And that's where we help companies build these applications these days at NVIDIA.
How will edge computing help in these efforts to make space data also more actionable and more quick to process? Jochen.
Yeah, I mean, I'm not that expert on the edge computing side, but I know that my colleagues work a lot with smaller GPUs that actually are sitting inside aircraft, spaceships, satellites that are able to process data where they are generated, and also apply AI models at the source, basically, and send this data and results to ground clouds, basically, process data. I think some people already envision something like a space cloud, so that you have an intermediate layer processing data. And I mean, it's the same story, right? Also, the edge computing even more must be oriented towards efficiency, low energy consumption, low power consumption, super fast inferencing. And this is, again, a great use case for accelerated computing and GPUs. So that might be the reason why our accelerated computing platform is also very much in the edge and connecting to the cloud. So people could really have a cross product capabilities, product building capability here.
Will?
I would just add to that. I think so much of how we think about edge computing in this sector right now is still defined by the form factor of the launch market. What I mean by that is that the small sat experience has been predicated on reliable small sat access to launch. So what happens when Starship defines the form factor of what you can get into space? We can suddenly rethink where we situate a lot of compute. And we may choose to move much more compute into space for a variety of reasons that could put a lot more power right out there at the edge. We're doing incredible things today with the cloud and a lot at the edge, but I think, as with so many things, the new unlock of new launch form factors will once again redefine the economics of what's possible here.
Another issue to consider is also when we are using this data and Earth observation, are also ethical side of things, regulatory side of things also. What do you have to say about that? What are some of the concerns of the financial markets of the future in using this type of data?
So I'll take a stab at that. I think that today's Earth observation companies have an overriding obligation to, frankly, humanitarian concerns, right? So in the early days at Spire, we realized that we could track wave height with our constellation, and that we were approaching 10-minute revisit time on any position on Earth. That meant that we could see wave activity. It meant that we could see a tsunami wave as it was moving across the ocean. And there was a board meeting where we had a conversation about our obligations with that information, our obligations to inform emergency authorities, national authorities of what we could see. And I think that Earth observation companies, as a collective, have to recognize their obligations in this regard. I think there's almost a need for an industry-wide statement of values to use these capabilities in part for good humanitarian purposes, purely on a pro bono basis. And I think we can all imagine a lot of other use cases.
Peter, do you have anything to add on that?
Yeah, I agree. I mean, I think with the right algorithms, it's not necessary to focus on one specific observation area to look for one specific event to happen, right? It will be possible to run monitoring algorithms that continuously observe all upcoming new imagery as soon as it's available on the repository. And then, of course, the question is, who needs to be informed about what? Yeah? And I think the data providers need to somehow consider that and develop a process that absolutely addresses this question.
Regarding opportunities also about using this data, and also still on the ethical side of things, or more moral side of things, there are also some positive considerations to take into. For instance, the democratization of access to financial services. Let's take in a moment into consideration how there are a lot of population in the world that doesn't have access to, for instance, banking services, because they simply don't have the financial history, so they are not creditworthy because of that. But because they don't have these services, it's not profitable for them, let's say, to reach these people. But space data can actually change that. For instance, a farmer will now be able to have a certain credit score and get financing for his innovative idea, because you actually have now data giving insight into how much he can produce, and in that way access services that he might not have otherwise. Will, what do you think that, what more doors do you think that this data can open for different populations around the world?
Well, I think, first of all, connectivity should be a public good, generally, right? And so as the new space architecture in general extends connectivity and then extends insight through Earth observation, I think you're getting more people not only online, but you're getting data about those people online. And you're starting to understand populations that, frankly, may not have been addressable or accessible to financial firms, in part because they come to market, legacy institutions come to market through a physical model, through a brick and mortar model, and those sort of things. I do think an overriding theme in our discussion today is about new models of underwriting. Underwriting models that can take into account ground truth, that can deliver transparency, and that might indeed make someone who is otherwise going to be overlooked by the financial system appear much more creditworthy, to your point.
Peter?
Yeah, I agree. So I think this is again an example for businesses that can directly generate new revenues with this type of data, right? And I think it's probably used in the insurance industry for quite a long time, because there you see a very direct impact of the value of this data. And in banking, it's different, yeah, because there you have more this regulatory driver, and regulatory driver always means that something needs to be done at a certain deadline. Yeah, this is not good for, say, coming to the best quality product usually. Yeah, but also in your example of, say, looking at farming and crops and things like that, that sounds a very scalable application. Mm-hmm. And I think this is absolutely a business case. Yeah, I think we see that in countries like Kenya, people are very willing to use technology, yeah? Way more so than in some European countries. And I think what you described is absolutely a very valid and very interesting business case. Yeah? And it could really scale very well. Yeah?
Jochen, I saw that you were on the edge there. Do you want to add something?
Yeah, at the moment in banking, in financial services, there's a larger discussion around financial inclusion. So how could you bank the underbanked, right? How can you reach people that don't have access to these services? And people are now, with the advent of large language models and generative AI, there's a huge hope that we could build digital assistants that would help serve these people. And if you add more information, more data using geospatial information, on small corporations or private individuals, whatever is needed here, I think that would support this mission to reach better financial inclusion, right? But what we also need in banking and financial services is this contextualization, like combining data like geospatial with financial data to create this context, right? And here, I think people are discussing more and more data exchange platforms also among banks, so that there's an open platform access, sharing data in a safe and secure way. For example, Gaia-X has some projects around that. I'm a member of the financial group there, and I know that in Luxembourg there's also a Gaia-X group. So banks are currently discussing how can they share data efficiently in a safe and secure way, looking at GDPR issues, of course, GDPR standards, and the discussion needs to be extended by leveraging geospatial data here for the applications that I just mentioned to reach a better financial inclusion, to combine NLP-based, text-based data with geospatial data.
Looking forward over, let's say, the next 10 years, Will, what is the single biggest change that you can see space-based data affect on the financial sector?
Well, I think we're gonna basically create global ground truth. For me, the overriding theme here is one of transparency, global transparency around assets, around underwriting opportunities, around, frankly, any financial transaction that is tied to a physical asset can now include a verification step associated with the condition of that asset, the circumstances around that asset's present situation. And I think that there's an enormous appetite for that kind of an underwriting and a monitoring model. And it's a huge step forward when we think about it, that kind of data against today's compliance paradigms and underwriting paradigms. And so I think it will actually take us to a place where much more constant monitoring will be possible, and that will in turn be reflected in asset values and in share prices and in the markets. And so we're building the data stack today to support that. The use cases, as we've talked about over the last hour, are abundant, and I think 5 years from now we'll all be very used to it.
Very good. Peter, which one is the biggest effect on the financial sector by space data?
I think the biggest effect is to overcome ESG assessments based on self-reported data by companies. That's still a problem, because at the moment companies who can put a lot of effort in their ESG reporting, of course, naturally get better ratings. Yeah? And what we just heard from Will, this possibility with a database of so-called asset level data to get to a consistent assessment of footprints across Earth is really a giant step. And it's a giant step towards transparency, towards understanding the supply chains, and to also raise awareness and responsibility, assign really responsibility for those supply chains. And in this process, geospatial data can play a very big role.
Jochen, which one you see as the biggest effect in the next 5 years?
I think the number of use cases will be growing in financial services and also the intensity. So just as Peter mentioned, the ESG will improve on this one, more transitioning to a more data AI-powered approach to get a better, broader coverage of companies and activities, and a number of other reasons here. Insurance industry will use more and more of these data to better understand change of assets and the risk, understanding the risk impact of climate change on assets. An example would be a company that we work with in Luxembourg. It's called RSS Hydro. It's a startup. They have used geospatial data and then they simulate flood in that terrain. And on top of this, they visualize the results. So everybody, as an insurance customer, like a corporate insurance customer, they could really analyze their own asset or their own manufacturing site or so, and use simulations on top of the geospatial data, let's say the geospatial ground truth, looking into the future, simulating, generating what-if scenarios. So it's an embedded application where geospatial data is the starting point, and then you use simulation and physics machine learning on top of this, and you visualize this on asset level, right? So the number of use cases will be growing. We have talked about insurance, ESG, but also in trading, obviously, and also property risk management in banking. So I think there's a study by OISPA saying that financial services will be that industry with the largest growth and demand for Earth observation data and services, and in this next years. And I would definitely confirm that. That's also my impression.
Very good. So we will open the floor for questions in around 1 minute. But before we do, I would like to ask, okay, we saw how it would look in 5 years. Are there any associated risks to this? For instance, the banking sector is already very reliant on GNSS for timing. Let's say that there is a solar storm, like we saw with some Starlink satellites, and some of them become inactive. What should these companies be worrying about this, and are they doing anything about bringing some resilience to the system, the new system that they are creating? Will?
Well, I think to put that question in perspective, you have to look at where we've been, which is we've been dependent on a lot of exquisite assets in space for a long time, and we now have much more distributed space-based capability thanks to smaller constellations. So the survivability of today's space-based capabilities is actually a lot better than what we've had in the past relative to some of the threats that you're talking about. Now, if we're dealing with an environment of increasing threats, you mentioned environmental space-based threats, but we also have to think about geopolitical threats associated with this infrastructure. And that, I think, is a much more significant risk, and one that I think is also beyond the scope of this conversation.
Thank you very much. So, Chris, I believe you'll open the floor for questions.
Exactly. I just wanted to open the Q&A. Thank you very much, first of all, gentlemen, for the panel. Any questions? Once again, we'll answer them directly here or also to everybody watching. Yes, please.
Thank you very much. Matthias Winchell, European Space Policy Institute. A question that I got while I was hearing a conversation, listening to a conversation. So you mentioned sort of trading, hedge funds, insurance companies. So ultimately, all these companies are also competitors between one another. Do you expect, and maybe for Will, Jochen, do you expect that these companies might end up sort of acquiring some of the companies that provide the data, that is, data on which they can eventually build up their business case, or perhaps tie them up in exclusivity contracts? Do you believe that's something that's going to happen over the coming years?
So from where I sit, looking at some of that activity, I'm not seeing a push for exclusivity at this point. When I think about good work that's being done, for instance, in property underwriting today, we're seeing the use of hyperspectral data and soil moisture data from Earth observation satellites to help assess the materials with which a building is built, assess fire risk, flood risk, and those sort of things. And today, I think the underwriters are largely trialing all the different data sets and all the different providers and looking for the best fit for them. But your point is a good one, and we haven't really talked about the potential for companies to actually have standalone capabilities. But when you run the numbers, I mean, discrete Earth observation constellations are within reach of America's global corporations. For a few $100 million, you can have your own constellation today. And what you want to do with it can be entirely up to you. So I think it's plausible, but I don't see it in the near future.
Thank you for that question and also the answer. We have a question here from our audience, from our remote audience. What specific improvements do space data providers and services need to implement to gain the trust of finance sector clients in the accuracy and relevance of their data and insights?
Jochen?
I'll read it again. What specific improvements do space data providers and services need to implement to gain the trust of finance sector clients in the accuracy and relevance of their data and insights?
Maybe there's an analogy or, let's say, a topic that's being discussed in financial services a lot these days is the AI Act. So building models with trustworthy AI, building a good risk management around models and data, that's really crucial. So banks need to provide this transparency, safety, security, explainability, and that also involves data that you process based on geospatial observations. So people usually work here with so-called model cards, explaining the source of the data, the granularity, how was the model trained, with which data, and then also once you have this transparency, maybe you want to fine-tune the models, you want to add more data, you want to add more AI or machine learning applications. So you basically need a system that supports a model and data lifecycle management, so that people could work on this collaboratively. There's one model building group, there's one model testing group. There needs to be created model cards, transparency around the data sources. So that's what we call AI and model governance, which is backed by accelerated computing and infrastructure, a full stack platform leveraging accelerators and software to actually build such an application. So this transparency is needed whenever data and models are being used in production in financial services.
All right, thank you very much for that. Anybody else want to add something?
I'll just offer that I think it's a crucial point. And anyone who's spending time in the Earth observation sector today, I think, is very aware of this role that we have to play around establishing ground truth. The standards that Jochen's referring to are vitally important. Think about this in the context of the fake news phenomenon that we have on a global basis. So our ability as an industry to verify and assert the authenticity of the data we generate, the pictures we take from space, all of those things is foundational to our mission. And we have a huge role to play if we manage this issue correctly, along the lines of what Jochen described.
Thank you very much for that. Any other questions here from the audience? Let's go. This is your chance. We all know you're going to go home being like, why didn't I just ask that question? I had the chance. All right. 3, 2, 1. All right, we'll close this session. But let's give our panelists a big round of applause, ladies and gentlemen. Thank you very much for being with us. Thank you.